Michael Hauser with Hauser Financial Coaching. Today, we're going to talk about one of the most important pieces of your family's long-term financial plan, life insurance. If you have loved ones who depend on your income, life insurance is a necessity. Before we compare types of life insurance, much less frequent situations, such as someone not qualifying for a type of life insurance, or someone who has more assets than the federal estate tax exemption, require further consideration. For everyone else, let's dive in. Two of the most common types of life insurance are whole life and term life. Whole life lasts for your entire life, if you keep paying the premiums. Term life covers your family for a set period, the term. If you die during the policy's term, your beneficiary receives the benefit. If you don't, the policy expires. Level term life guarantees that you pay the same premium for your policy each year, and the death benefit does not change. On top of whole life lasting for your entire life, there's also a cash value. So whole life is definitely the better deal, right? Well, let's dig deeper. First, let's define the purpose of life insurance, which is simple: to replace your income for your family if you die. A principal concept of whole life is that you need life insurance for your entire life. In reality, you only need life insurance for as long as your family is relying on your income. By getting rid of debt, building a full emergency fund, and investing, the need for life insurance for your whole life is eliminated. Whole life insurance is a permanent solution to a temporary problem. What about whole life's cash value? Well, it could take over 1 decade before the accumulated cash value exceeds the amount of premiums paid. This is because the entire premiums do not go to the cash value, only a small portion does. The rest go to the insurance itself and expense charges. Also, it's important to understand how you can access the cash value. One way is to take out a loan against the policy. You would be paying interest to the insurance company. And if you don't pay all of it back, your death benefit will decrease. Yes, you would be paying interest on a loan made up of your own money. Another way to access the cash value is to surrender the policy, so you would no longer even have life insurance. And if you die with whole life, your beneficiaries will only receive the death benefit. The insurance company will keep the cash value. Your goal with life insurance should be to get the greatest benefit at the lowest cost. Since both whole life and term life equally achieve the main purpose of life insurance by replacing your income for your family during the years that they need it, we can now focus on comparing costs. Let's look at an example of a $500,000 policy for 20 years for a 35-year-old male. Whole life will cost $6,852 per year, while term life will cost $364 per year. Over 20 years, whole life will cost $137,040, while term life will cost $7,277. Over 20 years, whole life will cost an extra $130,000. Said another way, whole life costs 19 times as much as term life. Now, $130,000 is a huge amount of money, but that is only part of the story. What if, instead of buying whole life, you bought term life, saved the difference, and invested for your future? After 20 years, you could have about $370,000. Listen, the only people who recommend whole life insurance are whole life salespeople. Whole life is trying to do two things at the same time. It's trying to be life insurance and an investment account. By trying to do too much, it does neither well. It is a savings gimmick with a poor rate of return. Your life insurance should be life insurance. Your investments should be investments. I recommend you purchase level term life insurance worth 10 times your annual income plus any outstanding debt, with a term that will go until you and your family are financially independent. Make sure that the term goes until you are fully debt-free, including your mortgage, and your children are grown. Buy level term life insurance from an independent insurance agency who can shop many different companies to get the best rate. By following these guidelines, you and your family will have the benefit of life insurance while still building wealth. If you are switching from whole life insurance to term life insurance, first get a term life insurance policy in place and make sure that it is full and in effect before canceling your whole life policy so that you don't have a gap in coverage. Also, if you have had your whole life policy for a long period of time, first determine if there are benefits that you can utilize before canceling your policy. As your financial coach, I will help you avoid traps and gimmicks, help you understand what is holding you back in your finances, build a plan to make your financial dreams a reality, and walk with you on your journey. Click on the subscribe, like, and get notified buttons so that you can watch future videos. Make sure to watch all the videos in my Know Your Numbers series. Also, click on the link below to schedule a free financial coaching consultation. I would love to work with you, help you know your numbers, and build a plan for your financial success.